Welcome back to the channel. In today's video, we will be looking at the 5 best oil investments that you can buy right now. We all know that inflation caused almost everything to skyrocket, and one of the most affected by this inflation is gas prices. I'm sure you've been aware of the news that when gas prices go up, everything goes up as well, because almost everything needs gas. From your electricity, your meals, and cars, all of these things need gas. Now, combine that inflation with the war between Russia and Ukraine, and then it led to a 7-year high in gas prices. You might think that's nothing to the 40-year high that we're experiencing with inflation, but just 2 years ago, back in 2020, gas prices were actually at a 20-year low during the pandemic. So we're seeing quite a fast turnaround, and until now, the pressure on gas prices keep increasing because of the sanctions placed on Russia. For example, earlier this year, Germany seized one of Russia's major gas pipelines, the Nord Stream 2. That decision has made the oil prices soar even higher. As a result, the demand for oil and gas has increased, which is why we're seeing above average yields for some of these stocks. So if you invested a year or just a few months ago on these stocks, then congratulations to you for the returns you've made. But for the rest, it's not too late. We're going to take a look at the 5 best oil investments that you can buy right now. Just a bit of disclaimer, this is not financial advice. I'm not a financial advisor, so always do your research and due diligence in every investment decision that you're planning. Let's get started. First, we have Exxon Mobil, or XOM. You probably already know this since Exxon Mobil is one of the most well-known gas companies in the world. The company descended from the oil giant Rockefeller Standard Oil Company, making it more reliable as a stock. And another enticing reason to invest in Exxon Mobil is they have a goal to reach net zero emissions by 2050. Not only are they known for gas, but they continue to make research and exploration on oil and other petroleum products. But because of their aggressive exploration of other products, they are highly exposed to extremely volatile prices of energy commodities. The good thing is, despite the fluctuating prices, you will get direct exposure to gas prices if you choose to invest in Exxon Mobil. You also get an above average dividend yield of 3.35%, and you can choose to use those dividends to reinvest to allow yourself to earn more compound interest. But of course, this will be based on how long you're planning to hold onto oil investments. Next, we have British Petroleum, or BP. The company is based in London, England, and like Exxon Mobil, it's one of the most well-known gas companies in the world. The main difference between BP and other well-known gas companies is that BP is focused on renewable energies. In fact, their goal is to become one of the biggest providers of renewable energy, especially in using solar and off-wind renewables. All companies have a goal to adapt to renewable energies, since countries and companies alike have made promises to transition to clean energy due to climate change pressure. So if you want a more future-proof investment, BP is the way to go. And when we're talking about dividend yields, British Petroleum has a 3.93 yield as of December 23rd of this year, which is standard for these gas company stocks. Third, we have Global Partners LP, or GLP. Global Partners is organized as an MLP, which is very common among energy investments. This is because they are involved heavily in the petroleum business. So as a result, you do have that tax-favorable treatment here of this being a limited partnership, which is only available to certain companies in the energy sector. Aside from getting stocks in oil companies, you also get exposure to their convenience store business. They own about 300 convenience stores, including the brand new Old Town Fresh. Global Partners also has a lot of gasoline terminals, and they're also one of the biggest suppliers of branded and unbranded gas in the Northeast. With Global Partners, you can expect a higher than average dividend yield of 7.47%, still quite high for the gas companies right now, and it seems that Global Partners will continue to do well. Recently, they were also recognized by P&G as one of the companies that lead environment sustainability commitments. That's another plus to consider investing in Global Partners, since they are actively making themselves future-proof. Most of the stocks I've shared with you are for long-term investments, but maybe you're willing to take more risks and do short-term investments instead. Let me tell you the fourth option, the United States Oil Fund, or USO. Currently, USO invests almost entirely in oil futures contracts, which are typical of commodities. In essence, a futures contract is an agreement between two parties to buy or sell a specific commodity at a fixed price at a specific future date. Keep in mind that when you invest in futures, you're actually holding a contract for the delivery of oil in the future rather than the actual underlying product. So your portfolio is exposed to a lot of danger as a result. Additionally, futures and other derivatives have fees. Therefore, long-term oil investments are not the purpose of funds like USO. It is primarily intended for short-term trading based on oil's fundamental prices. You also don't have any stock or ownership in a firm. You are essentially investing in a partnership or a fund. So there are a lot of factors to be considered with this kind of investment. Last but not least, you should think about investing in an energy sector ETF. If you don't want to have exposure to individual stocks, but also don't want to have exposure to futures, this will expose you to a wide range of various oil, gas, and energy companies. One of the most recommended ETF in gas right now is the iShares Global Energy ETF, or IXE. All forms of energy are becoming more expensive as a result of inflation. Each price for commodities like natural gas, oil, and other goods keeps rising. An ETF like the iShares can be helpful in this situation since it enables you to diversify your oil assets by allowing you to purchase a wide range of stocks. Because even if the gas and oil prices skyrocket, but the particular company you invested in isn't doing well, then your investment will likely perform poorly. But with an ETF, you still own a variety of equities to make up for the performance of that one particular stock, even if it wasn't performing well. IXE provides investors with exposure to oil and gas companies. Within the fund, you are given access to 62 different holdings, including businesses like Exxon Mobil, Chevron, and Shell. Just remember that an ETF charges a management fee of 0.43% per year. But if you want to invest and be on the safer side at the same time, an ETF will suit you well and whatever you pay will be worth it. So those are the 5 best oil investments that you can buy right now. Please let us know if you have other stocks in mind that should have been included in the list. If you do, comment down below. And if you learned something from this video, please hit the like and subscribe button, and we'll see you in the next one.